Welcome to Task. My name is Dan Pavic. I've been working with Task and small business owners for the past 15 years, and the following couple videos is just to give you a little bit more information about how Task might be able to help your practice or help your small business to ultimately save some money on your healthcare expenses. What I'd like to talk about first today is the tax benefits of a health reimbursement arrangement. So what is an HRA? The health reimbursement arrangement is an employee benefit plan for small business owners that provide tax incentives along with the ability to attract and retain quality for small businesses owners looking to actually hire. Our end goal here is to take your health insurance expenses and your out-of-pocket expenses and create it into a business deduction. Typically, medical expenses are taken as an itemization or a standard self-employed health insurance deduction. And again, by utilizing tools like the HRA, we're going to have the ability to turn that into a business expense. The health reimbursement arrangement is not a funded account. It simply is a reimbursement arrangement between the employer and the employee. So who qualifies? This is a pretty common question, and although there are certain entities that work better than others, the Schedule C and the F are the most common. These are what I like to refer to as the mom and pop type businesses. In most cases, that's going to require an employable spouse. You might also have a partnership or a 1065 filing, a C corporation, an LLC, an S corporation, and even nonprofits, all of which do qualify, but in some cases they might just have a little bit different parameters we need to follow. An ideal candidate for a health reimbursement arrangement is somebody that is married and filing a Schedule C, Schedule F, or a single member LLC. And again, in that situation, there has to be an employable spouse. The reason for that is that we have to have a W-2 employee in order to create an employee benefit deduction. And when you're a sole proprietor, you're not taking a wage, but we can create that employable spouse situation, and then we have an employee in which to reimburse. Secondarily, you need to have to either pay for your own health insurance or you've got out-of-pocket medical expense that exceeds in that $2,500 to $5,000 area. If you're somebody that's healthy, you've got employer-sponsored coverage, and you don't spend at least $2,500 a year, the tax benefits probably aren't going to outweigh the cost. And lastly, you're not going to want to have any other benefit-eligible employees in this circumstance. And we're going to get into that next. So what do I mean by benefit-eligible employees? We can set up eligibility requirements on the HRA itself so that anybody that works less than 25 hours per week, we can exclude. Anybody that works less than 7 months per year, we can exclude. Anyone that's under age 25, we can exclude. And lastly, you can actually establish a health reimbursement arrangement and set a wait period of up to 36 months before new benefit eligible employees would be qualified. So what does this mean? Again, in a lot of these types of situations where it is a husband and wife type business, our goal is to only cover the family. We cover that spouse under payroll, we set up the health reimbursement arrangements, and again, by using these eligibility requirements, we can hopefully exclude any of the other employees that you're not looking to cover. And this does not work all of the time. So if you do have full-time employees, they've been with you for a while, they're over age 25, this might not be a good fit. So what can I deduct? That's a great question, and a lot of times people are wondering about what their deductions look like today and what they would look like when they use an HRA. The most common deductions are going to be the health insurance premiums, and this can even include things like health sharing premiums or even direct primary care premiums. Even though they are not considered a minimal essential coverage, when we use the health reimbursement arrangement, we can actually get a reimbursement from the business and turn it into a business expense. A couple other premiums to note: long-term care premiums, cancer policies, accident policies, hospital indemnity, things like that, all deductible. And then, of course, the major one for some people is going to be the out-of-pocket expenses or non-insured medical expenses. This could be anything from vision, dental, chiropractor, prescriptions, copays, and deductibles. And with COVID here, they've also expanded that list to include medical supplies and over-the-counter drugs. So you quite literally can, in some cases, use a benefit card from Task, go into a pharmacy, and you can have a prescription drug, you could have NyQuil, you could have Band-Aids, and a candy bar, and you swipe your card, it's going to only pay for qualifying items. So very easy. So this is a great example of what with and without an HRA looks like. And in my example, we've got somebody that's paying $16,000 in health insurance premiums, and $5,000 in out-of-pocket expenses. What you'll notice on the left-hand side are going to be standard deductions, and again, that is without an HRA in place. The deduction in that case is going to be $16,000 for the health insurance premiums paid. That is going to be taken as a self-employed health insurance deduction on your 1040. In most cases, that's going to be a savings of state and federal income tax only on that health insurance, with an estimated savings of around $3,200. Now, with the HRA, what we're doing is we're converting those premiums. We're pulling them off of the 1040 and putting them right on the front page of the business return itself. So we're going to pick up FICA taxes, which is going to be Medicare, Social Security, and self-employment. So we're getting another 15.5% roughly, plus we have the ability to now take all of the $5,000 in out-of-pocket expenses and deduct them just the same as that the health premiums. So our deduction goes up to $21,000, and when we pick up that extra savings, our tax savings over doubles. So we've now got the ability to put an additional $4,150 back into the pocket of that small business owner. What are typical plan limits? There's a lot of different benefit plans out there, and there's a lot of different acronyms for HRAs. When we set up a standard health reimbursement arrangement, or what we like to call Agri Plan or Biz Plan, the typical limits are going to be all for health insurance premiums, with an out-of-pocket limit of $15,000 annually, and a carryover feature, which is up to $50,000. The carryover is a nice feature because what it does is it allows for you to roll forward any of your unused out-of-pocket liability. So let's just assume that you have an HRA and you spend $10,000 in a year in out-of-pocket expenses. You're going to deduct the 10, but the 5 you didn't use is going to roll forward into that carryover feature and can bank again up to $50,000. So down the road, if you ever have a serious injury or illness or accident, you legally can take that full deduction through your business. Tracking of the medical expenses is a critical component. Again, what we're doing here is we're taking everyday expenses that you already have and we're converting them into a business expense. So much like current business expenses that you have, whether it's a home office or vehicles that you're depreciating or mileage or what have you, you're going to need to track those expenses as such so we can take the deduction. The employee is going to pay the expenses, whether that's your spouse or in some cases it could even be yourself. Pay those expenses and each month get a reimbursement from the business for qualifying medical expenses. At the end of the year, Task produces a year-end statement. This statement is in a PDF format, will be the deduction that your business takes, and that is what we back with an audit guarantee. The typical pricing for a single employee HRA or biz plan is going to be $595 per year, and that's going to include task cards, and I'm going to go into those a little bit more detail. Again, your year-end reporting and the audit guarantee. The biggest issue that people have when they're looking at benefit plans like this is they want something that's easy. They don't want a lot of paperwork. They don't want a lot of headache at the end of the year. The task card was created to eliminate that. The task card is a merchant-coded debit card that we can tie directly into your business account. So you, your spouse, your dependent children can all have one. And as you pay for those things like copays or deductibles or glasses or dentist, you swipe your task card. The money comes out of your checking account just like any other debit card, but the nice thing about it is it uploads that expense to your year-end statement. So it makes that year-end reporting process very easy. To learn more about the individual HRA and how BizPlan can help your business, please feel free to use my scheduling link. This eliminates phone tag and allows for you to pick a time that works best for you, and we'll be happy to have that conversation, answer any questions that you have. Just simply click on the link. You can also email. Click on that link, book any of the 30-minute consults that are available. This is free to you, and we'll happily help you to identify if you are a good candidate for using the HRA. Thanks.